You're watching the Daily Market Comment for Wednesday, August 24th by Mario Sotikiriakos. I'm Christina Marujos, and thank you for joining us at XM.com. A disappointing batch of U.S. economic data knocked the wind out of the dollar rally yesterday, although the reserve currency recouped most of its losses in the following hours with a little help from the Fed's Kashkari, who emphasized the central bank's determination to eradicate inflation. The latest business surveys from S&P Global painted a picture of an economy that is losing power, and another sharp drop in new home sales added to the gloom. Companies are warning demand is rolling over as rapidly rising interest rates and raging inflation curtail consumer spending, which has translated into slower employment growth and new business orders being scaled back. Recent data has been filled with conflicting signals, complicating matters for the Fed, thus highlighting its dilemma. Yields on government bonds are simply not restrictive enough to bring inflation back to 2% because markets are speculating about rate cuts next year. Will Powell attempt to right the ship by stressing that rates will remain elevated for as long as it takes to slay inflation, or will he strike a more measured tone, fearful of hiking the economy into a recession? The dollar didn't stay down long. Euro-dollar spiked higher after the PMI data, but the parity level acted as resistance on the way up, blocking the advance. Dollar-yen fell, but it bounced back like a spring, taking solace in the fact that longer-dated Treasury yields closed the session higher. In the equity arena, it was another session characterized by uncertainty. The S&P 500 and the Dow Jones lost some ground, while the Nasdaq closed flat. Most importantly, implied volatility continued to rise, signaling growing demand for downside protection. In the commodity complex, crude oil prices rose sharply following some reports that OPEC would consider production cuts in case a nuclear deal with Iran is reached to prevent the market from being flooded with supply. A breakthrough with Iran seems to be coming as Tehran has dropped some of its key demands, but it may not be the smoking gun traders expect it to be if OPEC counteracts it. Gold prices edged higher too, capitalizing on the pullback in the dollar. It is still too early to get excited about a sustainable recovery, however, in an environment where Treasury yields have resumed their march higher and there is no real alternative to the US dollar. This was the Daily Market Comment. Thank you for watching at XM.com.